Hi everyone, I'm Katie Grindon and welcome back to my YouTube channel, Live and Invest in the Pacific Northwest. This is your quarterly market update for Q3 2025 and we've got a lot to unpack. We'll cover three key themes shaping both our local and national housing markets right now: the Fed, the forecast, and the future. So let's jump right in, starting right here in the Pacific Northwest. Across our region, we're continuing to see a rise in active listings. At the end of September, there were just over 20,000 homes on the market. That's up 27% year over year. In fact, 23 of the 27 counties covered by the Northwest MLS saw double-digit inventory growth. That's the fifth consecutive month of increasing supply, the most homes we've had available since 2019. Now, more inventory changes the game. Homes are staying on the market longer, price cuts are becoming more common, and sellers are realizing that pricing like it's 2021 just doesn't work anymore. The median price in the Pacific Northwest came in at $630,700 for September, down about 0.7% year over year, and down 3% from August. So prices aren't falling off a cliff, but the pace of growth is definitely moderating. We're sitting at around 3.25 months of inventory, which means we're still technically in a seller's market, but finally moving towards balance. Zooming out, the national story looks pretty similar. Active listings have now stayed above 1 million nationwide for 5 straight months, the first time since 2019. That additional supply has changed the dynamic. Homes are sitting longer, sellers are making more price adjustments, and price appreciation has slowed way down. Prices nationally are still rising, but the growth is much slower and more localized. Half of the top 50 metros are still seeing modest increases. The other half are seeing small declines, especially in markets that experienced 60 to 70% appreciation over the last few years. So the bottom line, the market is fragmented. We have a bifurcated national environment where some areas are still moving up and others are flattening out. Everyone's asking, what's the Fed going to do and when will mortgage rates come down? Here's the truth. The Fed does not set mortgage rates. They set the federal funds rate, which influences the broader economy. Mortgage rates tend to react based on what the Fed signals about inflation and growth. Their two main goals, their dual mandate, are price stability, keeping inflation near 2%, and maximum employment. Right now, inflation is still a bit elevated but stabilizing, and unemployment is steady. The challenge, job growth is starting to slow. That's one reason we could see the Fed move toward rate cuts as we head into 2026. Add to that the uncertainty of the current government shutdown, which makes economic data less clear, and we get a market that's watching closely for the Fed's next move. Most forecasters expect mortgage rates to ease gradually into the low 6% range by the end of 2026. Some predict as low as 5.9%. Why? Because the 10-year Treasury yield, a key benchmark for mortgage rates, is narrowing its spread with the 30-year fixed rate. That spread is basically a measure of fear in the market. As uncertainty fades and the path forward becomes clearer, rates tend to fall. We're already seeing a bit of that as rates slipped in September, buyer demand picked up, mortgage applications and showing activity both increased across the country and here in the Pacific Northwest. So what does all of this mean moving forward? Economists expect national home sales to rise from about 4.8 million this year to around 5.2 million in 2026. Here in the Pacific Northwest, we should see a similar trend: more transactions, more inventory, and continued price stability. The Home Price Expectations Survey shows an average national gain of around 15% over the next 5 years, a healthy, sustainable level of appreciation after the wild ride we've had. That means the housing market is settling into a more balanced, more predictable pattern, and that's good news for everyone. So what does this all mean for you? Buyers, you've got more options and less competition. Use this time to shop smart and negotiate well. Sellers, pricing matters more now than ever. Homes that are priced right and show well are still selling quickly. Investors, this is your window to find value in undervalued neighborhoods before the next uptick in activity. The truth is, knowledge is power. The more you understand what's happening in the market nationally and locally, the better decisions you can make for your future. Thanks so much for joining me this quarterly market update as we head towards 2026. The market is evolving, not dramatically, but strategically, and that's where opportunity lives. If you're thinking about buying, selling, or investing here in the Pacific Northwest, I'd love to help you navigate your next move with clarity and confidence. I'm Katie Grindon, and this has been Live and Invest in the Pacific Northwest. Tune in next time for more dialed in local insights in my monthly market updates, where I'll break down what's happening across our unique Pacific Northwest communities and help you learn more about the neighborhoods, towns, and investment opportunities that make this region so special. Thanks again for watching, and I'll see you soon.